What's going on, everyone? Happy Friday. Thank you guys so much for tuning back in. But as usual, I'm going to go ahead and let you guys know exactly how my trading went today and my thoughts on the market. So let's jump right into it. And as you guys can see from the screen, it was a small green day, right? Pretty much a break-even day, up $30. And in terms of how I did day trading wise, I only traded SQs. And I know it shows I have a loss, right? I mistakenly got into TQs in the morning thinking I was looking at SQQQ, right? So I took a small $10 loss on that, but I was up 210 on SQ, so I finished up about $200 on the day, and so I didn't hit my daily goal of $300, right? I didn't hit my 1% daily goal, but I'm just grateful that I was able to finish off the week green with this being my first week, using $30,000. And so these are my field orders if you guys are interested in that. As you guys can see, I did sell out of some Tesla stock at 5:34 in the morning, and I'll go ahead and explain exactly why, but I really started trading at 6:30. I meant to get into SQs, and once I realized I was in TQs, I cut it. Then once I actually got into SQs, right, you guys can see at 6:30, and I didn't finish trading today until 6:47. That was my last day trade of the day, or 6:48. This one, my apologies, right? So today was definitely more of an effective day. I was able to finish, my trading within about 15 to 20 minutes. So. And on top of that, right, the loss I took yesterday was all recovered within that little span, right? That's a big reason why I wanted to walk away. I felt like the area I walked away at was going to potentially get choppy, but I'm going to go ahead and break that down. As you guys can see, I also ended up selling out of more of my long-term positions. So I'm going to go ahead and let you guys know exactly why I did that. But as far as what I saw going on, right, it was pretty much trading choppy all pre-market as it has been. But at 5:30, we did see some big movement. And a big reason, or you may be asking yourself, why exactly did we see this big movement? Well, there were some reports coming out at 8:30 a.m. Eastern Time or 5:30 a.m. Pacific Standard Time, right? So 1 hour before market open, a series of reports came out. And what did they actually say? Well, the non-farm payrolls, right? What was actually reported prior was 504K non-farm payrolls, right? That's what was reported in the economy. What was actually expected? We were expecting a big drop, right, to down to 205K. But what actually came out in the report? Well, there were 311,000 non-farm payrolls, right? So that meant that it wasn't as low as we were expecting, right? It was actually a lot more than what was actually expected. So although it sounds good, right, like that there are over 100,000 more non-farm payrolls than we were expecting, if you're bullish on the market, this is not the best news because it means that the economy is not necessarily feeling the effects from the interest rate hikes that, the Federal Reserve intended the economy to feel, right? And if we're not feeling the effects, it may just make them that much more, motivated to be more aggressive with the next rate hikes, right? I hope that makes sense. But as you guys can see, the non-farm private payroll, same thing. Priorly, right, we had 486,000 non-farm private payrolls. What was expected was 203K. What was actually reported 265K. So definitely not or definitely more, right, than what was actually expected. And as I said, although it sounds good that there are more non-farm private payrolls than was actually expected, right? It's like good news is bad news and bad news is good news in this type of market. And because of that, right? So those two reports aren't necessarily the best news if you're bullish, right? But it was a bit of a mixed report because the unemployment report, as you guys can see, was expected to be at 3.4 and it actually went up to 3.6. Or the unemployment rate went up according to this report, right? So that would signify actually it's good. That's good news if you're bullish on the market because of the fact that the Federal Reserve, if they see, as I mentioned, that we are feeling the effects in the economy, then they may not want to be as aggressive. So that's why I'm saying it's a bit of a mixed report. We had these come in, higher than what was expected. And the unemployment rate also, was worse or it's higher than expected, but it's actually good, right? And the average hourly earnings and average work week, right? These both also, what was expected, they actually went down. So, a bit of a mixed report, as I mentioned, good news and bad news. But how did the market react? Well, you guys can see we saw this nice little dip, but we eventually ended up pushing up, right? Peaked out, and that's where I decided to load off on some of my Tesla shares because I am, the stock I am most heavily invested long term is Tesla, and I personally, if we did get rejected around this area, I personally felt that if we did start to fall and Tesla went down with it, it would be, I personally didn't want to just ride it down. So I decided to be safe and cut my shares there. I was willing to be okay if this thing continued to run on the day. I just wanted to play it more safe, right? And so, what ended up actually happening is this thing shot up. I was able to sell half of my Tesla shares, and then the market ended up pulling on back. So, it ended up turning out the way I hoped it would, but that I'm just explaining you guys exactly why I decided to load off on Tesla, right? I felt like the market, there was definitely chance it could dip because of what was reported, and because of that, I just wanted to play it safe, right, and lock in half of my shares. This thing ended up pulling on back, selling off, and so this is where the fun happened for me, right? This is where I started to enter SQs and really make my money. So as you guys can see, as soon as market opened, it was right around this area. So it started to fall, picked back up to the EMA, and then got rejected and continued to sell off very aggressively. And I wasn't, necessarily trying to be in too heavy for too long, because I felt like this thing was dropping so fast and there could be a potential change of direction. And so, based off these previous supports that we saw. So I was going to try to play it safe. That's why as soon as this thing continued to fall, right? As soon as this thing continued to fall, I locked in my trade, right? My last trade should have been right around, where was it? Right around this area, right? So on one of these last pushes, I locked in my trade. And what ended up happening, the market ended up bouncing, peaking back out, and then we got rejected and continued to sell off even more. And so once I saw the market peak up, right, and it didn't form a new high and actually got rejected very aggressively, well, this thing started to sell off, right? And so my plan with my long-term swings was I was going to potentially cut it if it broke through this support, right, on this candle. Because why exactly was I going to do that? Well, every single time we bounced around the SMA, right, long-term on the market, we've been able to, when we push above the EMA, for the most part, we're able to hold pretty nicely, right? As you guys can see, we'll push above and hold nicely. But here, right, we immediately pushed up, got rejected, and we're starting to break below it already. So that's why I decided to just play it safe in case the Nasdaq does want to dip on down, right, and prices get even lower. I can buy them in cheaper. But if this thing starts to confirm a support and breaks above this resistance, right, and inflation we see is starting to actually go down, then maybe that's a better sign to add again to my long term, right? But I'm going to really just stop trying to predict where the bottom is with these swing trades, because I did get burned, right? If you guys recall, the market pulled on back and started to bounce, and I literally averaged up at the worst spot thinking it was going to make a new high, only for it to start to sell off, right? So I got burned. Definitely learned my lesson. I'm not going to try to predict where the bottom is on my long-term positions. I'm just going to trade when it makes sense, right? If this thing pulls on back, validates a support here, and makes a new high, then maybe I can think about re-entering. But if we're at a critical point where this thing breaks support on the Nasdaq, we can see it start to dip still, right? This doesn't mean that this had to be the low. We can form a new low, right? So I just wanted to make you guys aware of that. But as far as why we potentially saw the market start to sell off the way it did, I don't know if you guys heard, but Silicon Valley Bank, which is the 15th largest bank, I believe, from what I'm hearing, collapsed today, right? So as you guys can see, there are a ton of articles on it all over. And so what actually ended up happening? So Silicon Valley Bank through 2020 and 2021 received a massive inflow of deposits, which the company then invested in mortgage-backed securities. And in the last year, when interest rates went up, the market value of those mortgage-backed securities dropped. And that loss, basically from speculating on interest rates and losing, is a fundamental problem for Silicon Valley Bank. So this bank actually would supply about half of the new startups in Silicon Valley with, loans. And it was pretty much a bank run where people were, pretty much hearing on the news that the bank was collapsing and everyone tried to pull out their money at once. But what ended up happening? The bank didn't have enough money, right? So they ended up collapsing. And there was a scary moment where, we weren't really sure what was going to happen, because, no one was stepping up to offer to buy them out, right? And so what actually ended up happening, the FDIC stepped in and said that they were going to, buy out the bank and establish it as a new entity, right? So that's ultimately where we're at right now. But lots of people are worried that, given the effects of this over $2 billion loss, if it's going to end up trickling down into other banks, right? So we just have to see what's going to end up happening with that and take it day by day. But that's pretty much everything I wanted to talk about in today's video. there is a very, very important report coming out on the 14th. It's going to be this next CPI report. So that's going to let us know really, right, if inflation is actually going up or down. And depending on what's reported there, it'll give the Federal Reserve definitely a better indication of whether or not they're going to be more aggressive or less aggressive with the next interest rate hikes, right? And whether markets are actually going to start to recover now or if we're going to continue to sell off. And so I just wanted to make you guys aware of that. I hope you guys all, found this informative and learned something new. But other than that, if you have any questions at all, go ahead and drop a comment and I will be more than happy to answer that. But I hope you guys all enjoy the rest of your Friday, all enjoy your weekend, and we will see you guys on Monday. Take care.